context. And Jim has given you some handouts which were on your chair. So you might want to grab those at this point.
Thank you very much. It's quite a salutary experience sitting there and listening to somebody else introducing you. And it just struck me that after all that twaddle about what I do in the day job and so on, which does at least pay to feed the children, so it's probably quite a good thing. The really exciting bit is that for the adoption bond, social impact bond from the voluntary sector, which is the real powerhouse of our economy, we placed 6 kids in families this last month. They are the harder to place kids that wouldn't find families otherwise. Now, if you're a government person, you say that yielding 5 million of net present value saving for the government purse. Big deal as far as I'm concerned. That's 6 kids. We've got families. So I think that's my big championship moment of the morning on behalf of that scheme. I think it's fabulous. Now, remind me, Ruth, how long have I got?
Maximum 15 minutes,
Maximum
if that's
15
okay.
minutes. Right, there, we've set expectations. I'll try not to use all 15, because we want to hear from you. What I've done here, for those that like pictures, and I'm one of them, I've given just a few slides on the handout, which summarise some of the key themes that I think are going on in that wider funding marketplace at the moment. And I wanted to give some of these, just 4 key elements to what's happening out there, so that you can position yourselves and what's happening in the wider economy, if I can. So first of all, we've heard that there's a changing landscape out there. We've had change for I don't know how long, but we've also had threads of consistency for I don't know how long. Shared value is one of the concepts being trumpeted in the Harvard Business Review at the moment. Actually, that was in Adam Smith's Wealth of Nations, published in 1762, I think. It's an argument there's nothing new under the sun, but there also is huge innovation and response to change going on, and I think our sector are particularly good at it. So what's driving that at the moment? Well, social need. What happens in times of austerity and refocus of government is that we do focus back on need within our community and need amongst those who are weaker in our society or more needy, which is a very refreshing and helpful thing. And I think we seem to have had a very strong swing in that direction. A lot is being talked about need within communities. Austerity budgeting, yes, it is there. We've heard how government funding is cut back. There is a shortage of funding elsewhere. Poverty, and if there is a poverty line debate as to where it is, that seems to be rising and catching more people. Big concern there. But also we've had some marvellous developments in the social business landscape, by which I mean the social sector and the private sector and elements of the public sector that are delivering social benefit through business structures. Just a couple of little examples. The community interest company legislation that has changed some of the boundaries for KICs. Some of the shift in pronouncements from the Charity Commission about charities trading and what we can and shouldn't do, and on the European front there's a new corporate form that's emerging in Luxembourg that blends social sector with private sector investment in a single corporate vehicle. That entertained me over Christmas because we've been developing a regulatory regime for it. So it is a one Europe, which is just fascinating. Localism. It's a political topic, but it's also a topic I think that plays strongly into the hands of our sector, the social sector. More view on our decision making, on our guidance, on us within our communities is going on. The funder landscape. The funder landscape is changing hugely. Mindsets in individual funders, the emergence of new funders, the idea of multi-tiers of different bits of funding achieving different levels of use within our organisations. and structures, legitimate structures, for dealing with issues like how do we take equity investment into charities. Can't issue shares, but you can have something with an equity structure, with a debt structure that looks like equity. So there's some marvellous flex going on there. Social stock exchange has emerged. It's colouring the marketplace. It's now an issuing platform. It can be used for fundraising as well as just sort of, gosh, isn't it nice facility. And I think it's going to be a strong player in starting to move those boundaries. And then the whole thing about impact measurement and developing knowledge about what works and how and why it's good. Not a great lover of monetisation. You can't put a value on those kids' lives. However, you can put a value on the saving to a local authority which encourages them to behave well. So there are some benefits on that. And the focus on impact, the focus on outcomes, is truly a very good one. If you haven't read, I've actually noted it on the next slide, if you haven't read Daniela Baroni-Suarez's paper on, that came out through the G7 task force about do we need to be investment ready? No, we need to be impact ready. It really is a good read and is a strongly pro-sector, really helpful piece, worth a look. So, the second theme is the emerging investment continuum. I think we've tended in the past to think we're either social sector or the private sector or we're public sector and we're not sure quite what we are. And they all sit separately. And what is increasingly emerging is that we're part of a continuum trying to deliver social good, and we can influence along that continuum. Whatever we do in the social sector and the charity sector does influence private sector organisations that are trying to deliver social good, be it education or engagement in communities or whatever. So I think we do need to see, as the funders do, that this is part of a continual spectrum. Now, the social value bit has two aspects to it. There is activity to avoid social damage, ethical trading and things like that, but it can also impinge on our sector, environmental damage and things like that as a corollary of social gain. And then the active creating of social benefit, being a change in the lives of people and their relationships with others and with themselves. That social value can be created internally or externally. We have a very interesting investment marketplace going on here. Now, if you just scan across that little bit on the second slide, if your eyesight's significantly better than mine, this really is printed very small, and I can only read it because I know what it says. In fact, I can read it if I do that, but that's just embarrassing in front of you. We go right from the ethical companies and, if you like, the super ethical private companies which are actively trying to create social value, through to what are emerging as they're termed profit with purpose. So they are for-profit companies but deliberately, actively trying to create social change. Through to, we've started to get to our side of the line, which is a purpose with profits, purpose but running for a commercially sustainable model, through into the social action charities that are running more on the basis of grant-type fundraising and philanthropic fundraising in order to deliver social change.
Can you give examples of each of those? It would be really helpful for me to kind of get a...
Yeah, sure. Social action charities. There's one called Ride High in Milton Keynes, and I will go small and large because I think that's helpful. Ride High in Milton Keynes, it takes youngsters who are disengaged with education, normally that rather than learning disabled or physically disabled, and by getting them involved with horses and involved with riding, they teach the youngsters and get them re-engaged with the learning experience through the riding and working with horses. It's quite a clear theory of change. Their funding mechanism for that is wholly philanthropic. They have cracking fundraising people who go out and chase corporate and predominantly individual sponsorship. They have no income streams from public services or whatever. The purpose with profits, there you might look at something like HCT. There's a charity, was Hackney Community Transport. Di Powell is the chief exec there. And they run a very clearly sort of for-profit sustainable model. It's a business model where they get income for bus journeys, income for training courses and what have you. But the aim in the services they put on and in all the underlying business, the prime aim is delivering social value, keeping communities together, enabling people to be cared for and to transport themselves. So it's where your income is coming from, but that then also affects where you get your backing funding, because if you're running one of those business models like HCT, a sustainable sort of generating economic value model, you can then take in investment by means exactly what we understand it to mean. Here's some money, you need to give it back to me at some stage and I need some interest on it. That's investment for a social purpose. It's social investment. Whereas the ones more like Ride High need the grant making, the philanthropy to keep going. Okay, good circle diagram. Still just about okay on time. Yeah. Just a quick look about what I see as 7 sources of funding. And I've called this social enterprise, but can we just use it to span the whole of charity and charity activity? The traditional area, the parent body and its funds, trading off your endowment that a number of charities do. That is supplemented by philanthropy and grant making, both of which we're fairly familiar with, and Claire's going to talk to us about a bit more in a minute, but that in itself is a developing and changing arena, and I'll leave that to you to talk a little bit further about. Purpose-focused and policy-driven. Purpose-focused, I'm talking there about government and other parties paying for services or outcomes. Now, I think we're starting to get the hang of government paying for outcomes. It'd be lovely if they can work out what outcomes are as opposed to outputs. Another debate for another day. What's quite exciting is we're seeing the emergence of private sector corporates paying for outcomes in relevant arenas. That really is interesting. That's a different form of corporate social responsibility or alignment with their own business objectives. So I'm seeing that starting to come in children's services for maybe for disabled youngsters, and we're talking about one which is on helping youngsters who have a parent with a mental health condition cope within schools. And we're likely to have corporates paying for those outcomes. Policy-driven is the ones where the government is in pursuit of a policy imperative, so regional development grants might be an example, or the European Social Fund needs funding again. What we've then got, the private finance one, for a long time we've had banks involved in our sector. That is widening, the sort of finance that is available, but it's still very much private sector, conventional involvement. The interesting one then is the social sector investment, which is investment style for a social purpose. Just flipping to the last bit then to think about who's emerging and what they're doing. It's quite a landscape of sources that's emerging, and they are from the sublime to the ridiculous in scale. I was saying beforehand, some of the ones that we're looking at are in the hundreds of thousands of fund, as a capital fund, through to the largest is 150 million. So it's a really wide space going on that feels more at home in the general commercial sector, actually. It's similar to the private sector. So in these first 4 categories, the ones that are ticked because they are actively operating now, we've got 2 styles emerging. You've got investment done with a social purpose, and you've got social backing through an investment structure. And they are really quite distinct. So an example of social backing through an investment structure would be the sort of investments that Esme Fairbairn are putting up in a number of organisations. Very much a grant-making style of approval process and a grant-making style of management. Whereas Bridges Ventures, for example, really good market-leading investor. They owe more in their style of management to venture capital, very active, hands-on investment management, which can be tremendously supportive or can be really quite interfering if you're not aligned with that style. So different styles there. We are seeing private investors, corporate investment, possibility of treasury products, issuing a debt instrument which then the local authority can invest in as a treasury product. That is certainly there. And cross-funding, we're seeing one charity putting a lump sum funding into backing another charity's activities. There's some big chunks moving around, £10 million units moving around on that sort of thing as well. Types and structures are very varied, and we can pick up on those a little later on if you'd like to. I'd just like to flag this final column. For the investors, they generally have 3 focus points. They want a yield on the investment. It does need to be investment and not gift. Gift is something different. Need to be identifiable outcomes, but increasingly, thank goodness, they're listening to us all as to what the real outcomes are and not trying to impose them upon us. And there needs to be systemic change. I want to put my money up to back you, but I don't want to keep having to throw more money at it to keep the change going. Can you make the change sustainable? Can you change the environment in which you're living? Positioning of those investors, there's 3 mindsets emerging. One is public servant, I'm backing you. Very simple, you need resources, I'll back you to do it. There's the standalone, pursuing their own mission. Some of the funds have particular focus points within their mission. Esme Fairbairn's an example, Impetus PEF is another one that has a particular thread it's trying to achieve. And so they will draw in investments that fit that. And the third one is the pathfinder, which is the leading the way. We think more people ought to gather around us and focus on this area. We'll go first. And we're seeing this happening, for example, in the Cabinet Office's programme for public service mutuals, which is, they've just announced the winning ideas on how to re-engineer that. So that's a little run through the whole landscape. I hope it's not as confusing as it might have been beforehand. The one extra bit that I'll just flag for you to have a look at the brochure about afterwards, which is on your chair, which is about social investment tax relief. There's a lot that is understood about it in the market. There is also a lot of tosh being written, technical term. I hope the tosh hasn't found it into this brochure, which was actually written for a client because they couldn't understand a blind word of what was said on the website. So there we are. Thank you.
Thanks very much.